All right, hello and welcome. Today, we are going to crack the code on one of the most fundamental skills in trading. We're going to learn how to read the market's secret language, a super powerful technique known as price action. So let's jump right in. You might look at this chaotic dance of red and green bars and just think, wow, that's just a bunch of noise. But it's not. It's actually a pretty sophisticated language that's being spoken by buyers and sellers all over the world. And just like any language, once you learn the vocabulary and the grammar, you can start to understand what everyone's talking about. So let's start with the absolute basics. This language that we're talking about, it's called price action, and it makes up the vocabulary we're going to use to interpret the market's entire story. Okay, so what is it really? At its heart, price action trading is just the skill of watching what the price is doing right now to make a really good, educated guess about where it might go next. It's a method based completely on the price itself. No complicated formulas, no outside opinions, just pure price. Now, this is a really important distinction to get. See, most beginners, they learn to trade using indicators. And indicators are basically just math formulas that act like a translator for what the price is doing. But price action trading, that's all about learning to read the language directly, yourself, with no translator needed. And that really gets to the core philosophy of price action. Traders who use this method, they love a minimalist, naked chart approach. They believe that the price itself is the single most important piece of information. They think that indicators can actually lag behind, or worse, hide the real story that the chart is trying to tell you. All right, so if we're learning a new language, we have to start with the alphabet, right? Well, in the language of price action, the most basic letter is a single price bar, or as you've probably seen it, a candlestick. Every single one of these little candlesticks, it doesn't matter what time frame you're on, is built from just four key pieces of data: the price at the open of that period, the absolute high price it reached, the absolute low it touched, and finally, where it closed. You'll often hear this called OHLC data. So these four data points come together to give each candlestick its unique anatomy. You get the full range from the very top to the very bottom. You get the solid part, the body, which shows the distance between the open and the close. And then you have those thin lines, which we call shadows or wicks, sticking out of the top and bottom. So here's the crucial part. The body tells us who won the battle for that time period. If the price closed higher than where it opened, the body's going to be green. That shows us that the buyers or the bulls were in control. If it closed lower, it's red, which means the sellers or the bears won that round. And the size of that body? That tells you how strong their victory was. And those shadows or wicks, they are just as important. They show us where the price tried to go, but couldn't. A long upper shadow, that tells us there was selling pressure, buyers pushed the price way up, but sellers came in and shoved it right back down. And a long lower shadow shows the exact opposite, buying pressure. Okay, so now we know our alphabet, those individual candlesticks. Now we can start putting these letters together to form words and sentences. And this is where a much, much richer story starts to unfold. See, a single candlestick is really just a letter. But when you put two of them side by side, boom, you suddenly get context. You can immediately see if volatility is picking up or dying down just by comparing their size. You can see if buying or selling pressure is growing by looking at their shadows. Now this is where it gets really powerful. The second bar is always testing the price levels that were set by the first bar. Did it try to push above the previous high and get rejected? Or did it slice right through the previous low without any trouble? These little tests tell you so much about the market's hidden strength or weakness. And then you add a third bar, and suddenly you have a complete little story. The first two bars create the setup, right? They form an expectation. That third bar is the punchline. It either confirms that expectation, maybe suggesting momentum is building, or it completely denies it, which could signal a reversal. It's a full narrative. You get a setup, you get the action, and you get the resolution. So you can think of it as a really simple three-step process for reading any chart, bar by bar. First, you look at the first two bars to get your bearings, to understand the context. Second, based on that context, you form a simple expectation of what might happen next. And third, you just watch that next bar to see if the market agrees with you or not.
Okay, so reading bar by bar, that's like reading a sentence. It's absolutely crucial, but to understand the whole book, you need to zoom out and see how all those sentences are forming paragraphs and chapters. And that bigger picture, that's the market trend. All of those tiny 3-bar stories we just learned how to read, well, they all add up. They combine to create these larger market swings. And when you start to see a pattern of higher highs and higher lows, well, you're looking at the textbook definition of an uptrend. The market's main story is bullish. And what's really, really cool is when you start connecting the tops and the bottoms of these trends, you create what are called channels. You can think of these channels almost like a visual roadmap for the market story. They help you define the path of least resistance and show you where the narrative is probably going to head next. So there you have it. From the alphabet of a single bar to the grammar of a full-blown trend, price action is the language of the market. And it's not about predicting the future with 100% certainty. Nobody can do that. It's about listening to the story the market is telling you, right here, right now. The charts are always talking. The only question left is, are you ready to listen?